welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. So we are on the last day of trade as far as this week is concerned. And what a fantastic week this has turned out to be. The benchmark indices have extended their winning streak for the fourth consecutive session on Thursday, marking the longest rally in nearly 2 months. Remember, this week alone, we've seen that the Nifty is up by 3.5%. Bank Nifty is up by 4.3%. The mid caps are up by 6.3% and the small caps are up by 6.5% as well. So that's the kind of rally that we have seen. Of course, it remains to be seen how things progress from here. Will we continue to build on to the gains? We have seen 23,000 coming back on the Nifty after a month, and we are at a one-month high for sure. So let's look at how the global setup is. The US benchmarks, however, took a pause on Thursday night. They ended just below the flat line after a 3-day rally, and that was amidst any lingering trade uncertainties that continue to haunt and to be a big overhang on the market sentiments. Apart from this, we also saw two more negatives in the US markets. Accenture's commentary on the US government business and also Nike's results, they all weighed on the Wall Street sentiment. So the Nike stock was down by 5%. In the after hours trading, and we've seen actually that the company is guided for a double-digit sales drop in the current quarter as well. So that's led to the stocks declining. You can see Dow Jones, Nasdaq, S&P, all three of them are down by about 0.2-0.3% in trade. Even Accenture dropped by about 7% in trade, and that was after flagging increasing uncertain macro environment, and that's something that could also probably be on the Indian IT story that just started to bounce a few days back again. Now, of course, like I pointed out, the Wall Street was down, but Asian markets also traded within a tight range this morning. The Hang Seng was down by 1.9%. Nikkei and Kospi slightly higher by 0.2 and 0.3% each. Chinese index was down by about 0.7%. The GIFT Nifty is indicating a flat with a muted start at 23,192 odd levels, absolutely flat in trade. As far as the foreign flows are concerned, the foreign portfolio investors have turned net buyers of the Indian equity markets right after a day of selling. So yesterday they mopped up stocks worth about 3,239 odd crore rupees, while the domestic institutional investors, they actually turned net sellers after 29 straight sessions. So we've seen this bounce being sold off by the DIIs. The net offloaded equities worth about 3,136 odd crore rupees as well. Now, of course, we will be looking at a whole host of stocks that you need to watch out for today. There is Manappuram Finance that you need to really track today. Bain Capital is going to be acquiring 18% stake there, and that's going to be an important one. Remember, last few days, the stock has been up and the stock has been continuously garnering more attention. And yet again, we can actually see the stock to be moving in the positive direction. Now let's look at some of the other stocks. Hero Moto, for instance, the board has approved a strategic investment of 525 crores in Euler Motors for 32.5% stake. That will also be in focus as well. We'll also have IEX. Remember, India's peak power demand, they say, is going to be rising by 34% going forward by 2031, 2032. That's what the CEA has mentioned, and that could augur well for companies like IEX. But our finance again will be in focus from the large NBFC space. Here, Rajiv Jain has been elevated to a vice chairman position, and that's going to be an important one to watch as to how things shape up there. Already the stock has been in an uptrend. Hindalco again will be important to watch out for. Remember, yesterday we did see Mr. Kumar Mangalam Bilra talking about how the new plans of 45,000 crore rupees of investment coming in for Hindalco, and especially for some of the projects related to copper. So that's going to be important to watch as well. So those are some of the stocks that we are going to be watching out for. But let's welcome our guest on board. We have Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill India, now joining in. Warm welcome to you, Mayuresh. Good to have you with us. Well, on a much better footing this week than the last time that we spoke. So you have 4 days of a rally, 23,000 back on the street. What's the D Street sign telling you? Are we out of those woods and 5 months of pain, or is this just going to be a bounce that will be used to sell off?
Morning, Sakshi. No, I think the last few days have been encouraging for the markets. And obviously, I think the levels of 21,800, 21,900 that we had hit, there were a lot of indicators that were pointing out that there has been a significant price damage that has happened for the Indian equity markets. valuations had become inexpensive at those levels as well. And other indicators, both on a macro scale as well as expectations on a micro scale, as far as corporate earnings are concerned, were hinting that the worst probably might get penciled in with the fall that we've probably seen. Obviously, I think the Trump rhetoric and what happens on April 2nd is going to be something that the markets will watch out for. And whether there is something on the negotiating table that probably comes through as that deadline probably comes by, or even after that, and what kind of an impact on an ancillary basis will that have on global economic growth, inflation dynamics, as well as the interest rate cycle, which correspondingly will reflect in terms of the bond yields and the dollar index as well, is
Hmm.
something to be watched out for. So yes, I think the markets have come off smartly in terms of the levels that we had seen almost a few days back. But I think investors should be a little bit more sector and stock specific in these markets, Sakshi. I think a large part of the broader markets is still inflated in terms of valuations, in terms of late stage basis. And therefore, being a little bit sector and stock specific in these markets will make sense. There will be clarity in the next few weeks, as I said. And in our opinion, looking at the macros and the micros, I think we should probably be close to a bottom over the next few weeks.
Okay, but that's definitely good news. Lot of talking points here. I'll come back to where are you looking at for opportunity here, but a lot of talking points and news flows today. So we'll start off by that. First up, Manappuram Finance. That's the big one that we are watching out for. The highly anticipated move has taken place. Bain Capital acquiring that 18%. The stock was already in momentum and it was already coming in as a favorite among the analysts there. What is your own suggestion of how would you look at it, especially in contrast with Muthoot Finance, the bigger player there? Do you think this deal can actually narrow the valuation gap between the two players now? How will Manappuram now be placed against Muthoot in terms of preference?
So second largest company, gold financing company, Sakshi, have been doing well over the last few weeks, the last few months as well, primarily based on the fact that RBI had put a lot of curbs on banks and NBFCs in terms of personal loans, unsecured credit as well. And therefore, I think a lot of the folks who could not manage to get credit from banks or NBFCs flocked to gold financing companies, pledging their gold. And therefore, I think the kind of volume growth revisions that have happened, Muthoot Finance management has clearly stated that is very, very obvious. Obviously, with the deal taking place, I think the expectations in terms of the pricing that Bain is expected to pay, I think fair value. And again, I think warrants which are getting issued at 236 odd rupees, I think that will trigger a huge amount of positive sentiments for the stock itself. But looking at what has happened, right, in the recent past, the expectation is at least for the next couple of quarters, till we get to a scenario where even in the Indian context, the rate cycle starts coming off and interest rate cuts start happening, where bank borrowings then become a little bit easier to access and tap, as well as some curves that RBI might also go easy on. I think gold financing companies might continue their reasonable amount of volume growth with gold prices inching higher. The LTVs obviously are at a much comforting levels for a lot of these gold financing companies with the likes of Muthoot and Manappuram. And therefore, even the core business over the next 2 quarters might actually show a positive surprise compared to the rest of the time. So yeah, positive news, positive macros, and positive micros at least for the next 2 quarters for gold financing.
Okay, and even in the pre-open trade, we are seeing Manappuram Finance at a 10% circuit at 239 odd levels at this point in time. Let's in fact welcome even Mitesh Panchal, who's joining in on the show with us to track technicals for us. Warm welcome. Good morning to you, Mitesh. Good to have you. Before we come to the markets, we were discussing Manappuram and the big news there impacting the stock already in the pre-open trade at 10% kind of a move. Would you buy Manappuram after this surge, or do you think a lot has been already priced in?
Good morning, Sakshi. Good morning, Maurice bhai. Good morning to all our viewers. Yes, Sakshi, as far as my Manappuram Finance is concerned, definitely would like to buy even after the surge of 10%. Reason being is that as per our system and method, before 2 weeks the stock has qualified. And we are of the view that in case of Manappuram Finance, just the rally has started. Because structurally, if you look, the stock has witnessed a very strong rebound from the level of 145, which it has made a low on 25th of October 2024 for the week ended 25th of October 2024. Since then, it's a one-way rally, and even in the recent ups and downs in the indices, the stock has performed pretty well. So we had a buy call at 208.39, that is the week ended 7th of March 2025. So our clients are holding direct or indirect position into that. And we are of the view that sooner than later, since the stock has formed a double bottom in the range of 210 to 230, stock is likely to cross 230 and enter into a new trading range. So yes, from us, from our side, Manappuram Finance is a buy.
Manappuram Finance is a buy. Okay. That's as far as the move is concerned. We will continue to look at it right now. The indication is about a 5.6% kind of an uptick in the pre-open trade for Manappuram. Okay, we'll get back to some of the other news points there then. Bajaj Finance, since we are discussing the NBFCs, I wanted to just get a view on that also, Mayuresh. From you, already it's the best performing stock of 2025 with the kind of moves that have come in. And overnight, again, there has been management changes. Rajiv Jain elevated to the position of vice chairman. How do you think things will progress from here on? There are a lot of brokerage houses who believe that further the stock could be moving up to even 10,000 odd levels. Would you still be a buyer after the incredible move that we've seen over the last few days?
So ratings, rankings, and institutional holding, the parameters we see at CanSlip are pointing out to positiveness for Bajaj Finance, and therefore I think it is top notch. Again, I think it's a leadership stock within the NBFC space. The leadership continuity will reflect in terms of the price action for the stock itself, and they've been doing a lot of things from a technology perspective as well. I think a lot of innovations are probably happening over the last few quarters and years, where there will be a lot of leverage that technology will now play in terms of how loan growth will take place, costs probably keeping in check because of all these efforts that have been undertaken by them. And therefore, I think the expectations in terms of cross-selling that we're probably looking at, moderation of costs, improvement and uptick in margins, and therefore return ratios along with profitability can be on the cards over the next few quarters and years. So again, I think leadership stock matching all the elements that we're probably seeing at anybody holding Bajaj Finance should continue.
Anybody holding Bajaj Finance should continue as well. What about you, Mitesh? If I have to ask you between Bajaj Finserv and Bajaj Finance, how would you go forward?
I think I'll go with Bajaj Finance because I'm of the view that sooner than later stock will hit the 5-digit mark, and the stock is really into momentum. So I'll definitely go with the view of Mayuresh Bhai. Here, I think technically stock has formed its recent bottom at around 8,500, and since then stock is heading for a higher bottom formation. We are of the view that sooner than later stock will target 9,800 to 10,000 levels. So yes, between these two, my choice is Bajaj Finance.
Bajaj Finance seems to be the consensus choice right there between the two large players right now, about 4.8% higher, 9,100 levels that can be seen on this one at this point in time. Okay, let's get to the markets. The Nifty and the Nifty Bank now indicating an opening below the flat line, 23,168, and the Nifty Bank opening at 49,927, about 0.3% lower. So there could be a slight negative opening. Mitesh, to you again, 4 days of a rally, we've seen 23,000, 23,200. Do you think time for a little bit pause if this rally has to sustain, or will this change for the better?
I think Sakshi pause is required. We had a good bounce back from the lower level. So I think 23,000, between 23,000 and 23,500, technically we are of the view that market will have some sort of a time where it will consolidate and then it will move up. So I think it is better if the market will pause, give a little bit of a correction. That is a good sign for the strong rally on the upside. So yes, we are of the view that between 23,000 and 23,500, you will see certain pauses and you will see certain corrections. So I think today's correction will be healthy. One of the simple indicator which we are following, Sakshi, right now is that if you look at since last many days, indices are closing at the high point of the day. And that is the simple sign of a reversal, both on the upside and the downside. Whenever the indices are closing at the low point of the day, generally it is a sign of a top formation. And when the indices are closing at the high point of the day for 5 to 7 consecutive days, generally you can say that yes, probably the bottom is here in place. So I think this is such a simple indication which is ignored by majority of the market participants. But in these kind of simple signals, you get a big clue. So we are of the view that yes, a pause is required, and correction, bit of a correction of 1 to 2% is also required at this point of time for a healthy upside. So yes, we may see 23,000 probably in a day or two, but I think any dip going forward should be bought into.
Okay, any dip should be bought into. Mayuresh, coming to you as well on the markets. We were just discussing that bottom could be in place in a few weeks from now. What are people like yours advising at this point in time in terms of the free cash deployment at this point in time? A lot of people would have been holding on to cash, looking at the right moment to dip it into the markets. Do you think now is the time to go aggressive yet again in the markets?
So I think we have upgraded the markets to a confirmed uptrend as per our strategy, and therefore I think 21,800, 21,900, we are calling that as a bottom for the markets as we speak. Obviously, what happens on April 2nd and after that, I think if it's a very, very aggressive mode and there is no backing down, there might be some upheaval in the levels that we might see. But at least looking at the juncture right now, the rhetoric that is getting played out, I think 21,800, 21,900, the recent close that we've made, that we are trying and anticipating should be the bottom for the markets. Having said that, I think the deployment of cash should be obviously staggered across good quality stocks, good leadership stocks, and in our opinion, I think agrochemicals, the rural theme, certain banks, NBFCs, certain broad market stocks which are probably related to infra or the capex related themes might actually do well. And therefore, our entire focus is probably getting pegged out in terms of our software Pandre, which is indicating that these sectors might actually remain in the limelight. And a select few defensive stocks, some stocks from the consumer discretionary space, and some stocks from the pharma space might also do well. So I think that's the construct that we are probably trying to look at, Sakshi. Again, I think staggered way, but invest in qualitative stocks from these places.
Okay, that's as far as the call goes. Mayuresh, another space that we are watching out for is the IT pack. Why am I discussing this yet again? Is last few days there has been some bounce, but what we've seen overnight with Accenture's call there. Do you think this will be another dampener? We are already seeing Nifty IT index indicate a 2% kind of a downtick in trade today yet again. So that bounce again is at the risk of being taken out. And, of course, there is this fear that there could be earnings downgrade, macro uncertainty again weighing on the IT stocks. How would you play this space?
No, again, I think we were on the sidelines for the last few months because I think it had gone through a periodicity in the last quarter itself where valuations were elevated for large and mid-cap IT companies combined together. And therefore, I think the spate of news that is coming through, the expectations that the sector had built up with corporate tax cuts expected to come through in the US, discretionary spending going higher, order wins might remain stable, significantly higher with better pricing. I think all that comes on the sidelines as we speak. And therefore, I think with the mixed commentary that has come through for Accenture, we've also seen a series of salary hike delays that Cognizant is going through. So there is going to be a periodicity where you're probably going to see order wins probably happen with a lag effect as far as the entire sector is concerned. And therefore, the price reaction that you're probably seeing is very, very evident. Our strategy is very simple for this sector. I think it's just a couple of weeks or 3 weeks away when Q4 numbers will start coming out and IT sectors will be the first to announce that. Let's see how the numbers come out. Let's see what the management commentaries are hinting at. And then we keep a call on the sector. Till that point of time, we're on the sidelines as far as the sector is concerned.
Okay. Mitesh, how about you? IT still on an avoid list as of now?
Okay, so if I look at broadly, Sakshi, from 2023 till date, Nifty IT has formed a recent bottom at 26,184 for the week ended 21st of April 2023, and a recent high for the week ended 13th of December 2024 at 46,088. Since then, we had a correction. Now, if I draw the Fibonacci and look at the 50% mark, it comes at 36,136. Now, last week it manages to close above that level. The last week near to that level. Last week close of 36,122. This week it is trying to, but looking at the today's correction, probably in the pre-open, we are of the view that unless and until if the indices are not closing above 36,136 on a weekly basis, it's still a weak call. It is still weakness is going to persist as far as Nifty IT is concerned. So probably on the downside, we are comfortable buying any of the stock when the indices are near 33,787 or 34,000. That is nothing but 61.8% retracement. So as of now, the weakness is going to persist. There is no signs of a trend reversal. Advisable to avoid the IT stock as of now, whether it's a large cap or a mid cap.
Right. Okay. Fair point. So that's as far as the IT pack is concerned. The other space which we'll quickly discuss is, in fact, we'll look for the markets and then we'll come back to it. It could be a longer discussion. Right now, what we're looking at is a muted start on the Nifty. Now, 23,168. Let's actually look at some of the heavyweight counters. Reliance Industries, that's been somehow, flattish off late over the last few days. Let's see how that one opens in trade today. It's indicative of start about a 0.5% uptick at this point in time. Let's also look at the banks clearly, because they have been the front runners of late. And let's see whether those are the pockets that continue to hover higher. Opening ticks 23,143 on the Nifty bank at 949,978, a 0.2% kind of a down tick. Let's look at the heavyweights. Banks, especially ICICI, HDFC, Kotak, these have been the contributors. Also Bajaj Finance and Manappuram Finance that we'll be looking at today. ICICI Bank opens on the back foot, 1316, about 0.4% lower in trade. Let's look at HDFC, again on a lower end, 0.7% on a declining side. And let's also pull up Reliance is about 0.5% higher. But let's pull Manappuram and Bajaj Finance, the two big counters from the NBFC space that we are going to be watching out for today because of the news flow. There was already an indication that Manappuram will open higher. It's opening about 2.2% higher, 222 odd levels. So we'll keep an eye out on that. What about Bajaj Finance? Overnight changes about 2.6% higher. So it's in the positive zone. 8,905 is what we can spot on that front. IT, that seems to be on a back foot again, 2.2% of a decline on the IT index, as was being indicated in the pre-open trade. Let's look at Infosys, HCL Tech, TCS, Tech Mahindra. All of these stocks should be, in the declining zone. So that's under pressure. What's also under pressure is the mid-cap space, although the small caps inching a little higher, but you can continue to see all the stocks in your screen as far as the IT pack is concerned. Flattish trade on the mid caps. Remember, these were the pockets that were outperforming in the last few sessions. Pharma auto is on a higher zone, so that's a bit of the positive side. 1108 advances to about 428 declines, so the market mood is also skewed towards the positive, so that's a good part. Financials are higher. CPSE index is higher in trade. We have autos that are up, capital goods that are up, oil and gas also slightly higher in trade. FMCG slightly up, the realty index and the pharma index also in the positive zone. But what's losing ground is IT and the financials at this point in time. TCS, Infosys, HCL Tech, all three of them down by over 2%, with that Accenture raising the lower end of the guidance, but raises concerns over the Dodge cut as well. So we'll have to keep an eye out on that. Let's get back to Mitesh. Mitesh, how do you see the opening for the markets?
So far, so good. I think mid-cap stocks are picking up space. Apart from that, few banks are also picking up space. Realty is also picking up space. So it looks good. In the early few minutes, what is looking good on the chart is ABFRL at 252. I think it's a buy. One can have a stop loss at 248. The intraday target could be 258, 260. Second stock which is looking good from the intraday perspective is Astral at 1275. That is also looking good. At 1260, you can put your stop for the intraday target of 1290, 1310. So ABFRL and Astral looks good as far as the opening few minutes trade is concerned.
Okay, fair point. So that's the move that we are looking at. Let's look at the defense play. That was something that I wanted to discuss with both Mitesh and Mayuresh. This space has been in trend over the last few sessions, and we have been seeing strong momentum. Again, the defense index opens about 0.7% higher. Again, there is news flow of the Defense Council talking about huge orders there. Yet again, the mood across the world also, there is, clearer focus on the defense names. Even today, you see a lot of these names, despite slight weakness on the major market, you can actually see them up and about in trade. Mayuresh, what's your call on the defense space? Do you think finally the cost correction is taking place? Will we see these stocks like HALBL, the shipbuilders, reaching their all-time highs, the previous highs?
Quite a possibility, Sakshi. And again, I think the kind of budgetary allocations that are happening, specifically in the European context, I think there might be some triggers as far as our defense companies are concerned. The exports have gone up significantly over the past few years. And therefore, I think that becomes a moot trigger point, not just in terms of the order books that they have as we speak right now, but expectations of more high margin accretive orders coming in, if any, from the Eurozone as well. And therefore, I think this space will remain in flavor. And obviously, the big picture argument in terms of order book, revenue visibility, the margins of these orders, they've been executing well, albeit I think the last quarter was a little bit of miss. But if they continue doing this, I think the earnings stability and the earnings growth might continue for this space as a whole. And therefore, the dividend yield that these stocks also mete out and give out also becomes as an additional buffer in terms of the overall macro concerns that the globe is probably going through. Therefore, I think defense might remain in flavor. Obviously, stocks like BEL, stocks like Mascom, TOP is something that we continue liking. The rating, rankings, institutional holding, earnings growth rate, ROEs are all very, very supportive on what we probably look at for companies within the space. So yeah, I think interesting space. The big picture argument stays with that. DL and Mazda probably look interesting within the space.
Yeah, okay. If I have to ask you, Mitesh, your top stocks from there?
I think two stocks. First is Bharat Forge. That is looking pretty promising at the current level. And we are of the view that the way by which the stock has formed a recent bottom and made a higher of higher bottom formation, going forward, stock likely to perform well. And 1300 to 1400 is what we are looking at in Bharat Forge. Second is Masgando. I think the way by which the stock has seen a marathon run on the upside, we have seen good amount of correction. And now I think the stock is coming back. So probably 2800, 2900 is what is visible in the next 1 to 2 months. So aggressive move will take place as far as defense is concerned. I think, as we all know, that the new players and the new heroes are different after the correction. But we are of the view that this time around, two sectors will bounce back very strongly, irrespective of the old hypothesis. First is the defense, which you're talking about rightly, and second, I think, is the entire chemical space, which Mayuresh has discussed. So I think we are of the view that these two spaces are where one should look at it. Now, since we have the Nifty India Defense Index, so it is easy to track all those stocks, since prediction of the sector can be easily done if the indices are available. Okay. So I think, yes, these are the two stocks and these are the two sectors where we think that probably a strong bounce will take place in the next 1 to 2 months.
Okay, got that. Let's discuss one more pocket then. Chemicals was something that Mitesh was pointing out, but let's also talk about commodities there and metals as well. That's also in focus, and we'll see how this is shaping up, especially the likes of Hindalco that's in news, unveiling new identity plans of 45,000 odd crore rupees of investment coming in, big plans there. At the same time, globally, we are seeing a lot of copper prices at record high levels. So ferrous, non-ferrous metals, they are coming back into flavor. Mayuresh, what are you reading into the developments that are taking place? What does it mean for incumbent metal players in India, especially the likes of Hindalco?
Again, I think it's a cycle, right? And these companies will go through their cyclicality as the pace probably evolves. But having said that, I think the kind of dumping that is still happening across the globe that China is probably doing to run its plants efficiently, ensure that fixed costs are properly absorbed. HRC, CFC prices have come off. You've probably seen some respite in terms of copper prices, some respite in terms of aluminum prices as well. And again, I think the main trigger for these stocks is that the inventory levels across the globe are at abysmal levels. So I think as demand picks up slowly and steadily, and as restocking happens, the LME prices will be relatively better, which will reflect operating leverage on the stocks. But I think it's a matter of timing when you probably enter this phase. If you enter the phase for these stocks too early, you might get stuck up for some periodicity of time. If you enter it too late at the end of the cycle, you might end up having stocks at far higher levels as the cycle turns. And therefore, the cycle has not turned for the better so far. It might take a few weeks, a few months, not really sure of the time. But as that happens, I think the mood for metal stocks will definitely change. One has to be a little bit patient and see how things evolve on a macro scale over the next few weeks and months. And then probably enter the cycle. Because once the cycle starts, I think the cycle might very well continue for the next couple of years.
Okay. Mitesh, what about you? Any, call on the metal story? There has been a lot of debate ongoing for the last few months on metals, whether to be or not to be in the metal story. Will it again turn out to be a volatile play, or will it be a structural story? What's your sense there?
Yeah, I think more or less the sector will come back. I think the if you look at the past performance of metal sector, so actually this is one of the sector where the ferocious move will come on both the sides, and this is one of the sector where you will not be able to understand where the bottom formation took place. So I think you have to take bit of a risk and take the position because it is difficult to guess the bottom and then you take the call. So within the space, I think what we like right now is Sales Steel Authority of India. Since last 8 to 9 weeks, the stock is consolidating between 115 on the upside and 199 on the downside. Multiple time it has hit a level of 115 on the upside but unable to cross it. We are of the view that once the stock has crossed above 115, to be very precise, 116 on the weekly basis, then the doors are open for 130 and 150. So I think very strong up move is there on the card as far as sale is concerned. One should go and accumulate the stock at the current level. The call is given actually only based on the delivery side. So there is no stop loss which we are mentioning right now over here. So I mean you can accumulate the stock in tranches for the target of 130 and 150 in the next 1 to 3 months.
Okay, got that. So that's as far as the metal pack is concerned. Okay, Marish, before we have to let you go, why don't you tell us what are the newer ideas that you're spotting, the newer sectors that you're betting big on in this recovery in the markets? What's giving you more confidence to bet big on?
I think agrochemicals and hospitals within the spaces that we discussed look very interesting to us because the earnings stability, even when the earnings were coming off in the last few quarters, has probably got maintained. And therefore, I think within hospital stocks like Krishna Institute of Medical Sciences, where I think they've been adding beds since the end of the last financial year on an asset-light, in an asset-light manner. And therefore, I think the expectations in terms of utilization levels inching higher, the average revenue per operating bed inching higher, and dynamics improving for the better might be a huge possibility as we see it. So I think this is one stock that we probably kept on our radar. The ratings, rankings look top notch for this one. The other one within the agrochemical space is obviously going to be Sumitomo Chemical India. Numbers have been fabulous for the last quarter, even for 9 months FY25. Numbers have been relatively better compared to FY24. With expectations of the rural economy coming back, with expectations of La Nina conditions evolving, the hope in terms of a bountiful monsoon will mean that agrochemicals will come back in focus very, very sharply. You've seen farm gate prices hold up. Input costs have largely stabilized. A large part of the company operations with patents are indicating to backward integration, margin improvement with all these factors at play. And therefore, I think return ratios, ROEs that we map at Market Space India, the institutional holding, which we see from a cancelling perspective as well, looks extremely strong. So I think these two pockets is where earnings resilience and stability will continue in Q4 and well into FY26 as well. And therefore, these pockets look good within these two pockets, as I said, Krishna and Sumitomo probably look good bets at this stage.
Okay, fair point. Well, thank you so much, Mayuresh, for being with us on the morning edition and helping us sift through various ideas, strategies in the markets at this point. We hope this only gets for the better when we see you next week. And we hope that you have a great time and see you very soon.
Absolutely, Sakshi, and I'm not going to take my beard off, I think, for quite a few weeks now. So let's see.
Yes, absolutely. And that seems to be working then, Mary. So you absolutely know what is working for the markets. Keep doing that and keep at it. Thank you so much for being with us. Always good to chat with you.
Same here.
All right, we are near the first 15 minutes of a candle. Let's see how the markets are shaping up. Let's look at various moving parts and then we'll continue our discussion with Mitesh as well. 23,173 on the Nifty. You have absolutely a flattish move. 15 point of a downtake, 0.06% of a decline on the Nifty as of now. Let's look at the various other moving parts in the market as well. Among the other pockets, let's look at the Nifty. The mid cap and the small caps, how things are shaping up there, slightly better off than what the opening tick was. Mid cap 100 index is up by 0.5%, small caps are up by about 0.9%. So that's a bit of an encouragement on that front. Among the sectors, Nifty Bank absolutely flat with a negative bias, 50,000 although is back with us. You have IT definitely under pressure, although cooled off from the opening cut, 1.3% lower. Metals absolutely flat with a negative bias. Consumer durables down by 0.6%. But what's doing well? About half a percent uptick on autos. Financial services 0.2% higher. FMCG 0.2% up. Pharma about 0.8% up in trade. Realty index is actually doing very well, 2% higher in trade today. So last few days of a sell-off is actually converting into some gains coming back on the realty pack. That's also something that we can actually discuss with Mitesh. Mitesh, your call on the real estate stocks?
Yeah, I think it's also picking up space, Sakshi, and the one stock which we like among them is DLF. If you look at the structure of DLF, from 800 odd level, stock has witnessed a very sharp correction, and now it is picking up space. So I think DLF is one where you should look at in the near term. You can put a stop at around 695, opt for the target of 750, 760 in the near future. So yes, the space is picking up space, and I think one should get into BLF at the current level.
Okay, got that. Let's look at some of the other moving parts as well. Mid and small caps, Mitesh, what's your call there? There has been some bounce over the last few days. We have seen some recovery coming back to shape, but will it be sustainable? Is the question. 1% now higher for the small caps. Are you confident of looking at it?
So I think a few pockets are definitely looking interesting, Sakshi. And after the fall, as we all know, the winners are changing and the losers are also changing.
Yeah.
So one to be very careful in selecting this thing. I think the biggest lesson, rather than selection, Sakshi, I think what we are advising our client is that the biggest lesson which you can learn is what to do or what not to do with this small cap.
Yeah.
I think to do is very important. I think selection of mid cap is not that important, Sakshi, but when the market when the market hits on the lower end of the range, then you are unable to execute the stop losses. And everybody has a limited capital. So rather than picking up the stocks in mid cap and small cap, what we are advocating our client is a learning lesson that whatever you stocks you pick up, not an issue, do some homework and please put a stop loss. If you put a stop loss, at least you're left with certain capital. If not, then you're stuck up. And even if you have a good idea, Sakshi, right now, but if you don't have capital, what you will do? Nothing. You will not be able to generate alpha. So the biggest lesson, I think, rather than picking up the stocks right now for all the retail investors, is to understand that stop loss is must. If you have a capital, then only you can take the trade. If you don't have a capital, you will not be able to take a trade. So don't venture into identifying a good stock. Please make sure that whenever next time such carnages will take place, you are left with capital. So I think the biggest lesson which one need to learn in the current correction as far as mid and small cap is concerned is not the stock selection, but execution of stop losses so that you're left with capital to execute the next trade or the next big trade.
Okay, fair point. So that's as far as the mid and the small caps go. Let's in fact look at some stock spotting at this point in time to see what can be discussed with Mitesh. Small caps only. Let's discuss a few stocks there. Tejas Networks is up smartly higher today, 8.8% up. There's Credit Access Grameen, 7% higher. Signature Global, again from the real estate pack. There are even railway names, JWL, Railtel, all of them up and about in trade. Titagarh is up in trade. We were discussing the defense pack. Railways, what is your thought there, Mitesh?
I think in the railways, you should not do two things. First is that do not try to average it out your stocks, because I think what we are looking in the railway is nothing but a dead cat bounce. So probably the entire sector will go for a large period of consolidation going forward, Sakshi. Second thing is that what you're talking about, Credit Access Grameen, or for an example, the Tejas network. Now there are certain stocks, high beta stocks, which are definitely going to post a very strong gain. But I think the easiest way to participate, Sakshi, after a meltdown is to look at the commodity-based stocks, which you have already discussed. I think, right? So what we are looking at is a sugar. What we are looking is in the metal. What we are looking is a cotton. What we are looking at, I think, the fertilizers. So I think the easiest way to pick up the stocks in the mid and the small cap category is the commodity stocks, because per se, whenever such corrections took place, they are hammered with a big knock, and the possibility of a strong rebound takes place there only. The reason why I'm telling you this is that we have an experience over the last 20 years is that after such a big correction of 15% or so, you will get these stocks at a very attractive risk reward ratios, actually. And that is the reason why we are advocating this. So playing sugar right now with a stop loss of 5 to 7% will end up making you 30-40% in the next 6 to 9 months. So I think commodity related stock should be on your radar as of now.
Okay, fair point. So that's the move that we can expect, the pockets that you should be focused on. New age tech space, let's discuss that, Mitesh. We haven't discussed that today at all. We have seen Zomato bounce from about 201 odd levels smartly higher, now 225 plus. We've been seeing PB FinTech, Paytm come back in action, One Movie Quick Systems come back in action as well. Delivery also, which has been a large underperformer, has been showing us some upticks as well of late. What is giving you confidence here?
I think the big consumption theme will probably work. So I think within the space which you have discussed, two stocks I will pick up. First is delivery, and second is Zomato. I think in the platform companies, you need to look at very categorically where the ability to bounce back will take place. Okay, so I think the ability to bounce back for these stocks are much higher as compared to Paytm or any Mobility or any other stocks. So I think Zomato and delivery is two stocks which I am looking at the currently. Second thing, Sakshi, some of the big boys are moving very slowly and very softly. So I think one should also look at Kotak Bank and HDFC Bank as well. Though the idea of looking at the stock is looking pretty boring or not that promising, but I think slowly and gradually, both these banks in the year to come, in the next 6 months or so, will post a very strong gain. So one should look at both Kotak Bank and HDFC Bank and have some sort of a holding in your portfolio.
Okay, fair point. We'll keep that in mind as well. Mitesh, also wanted to ask you about this cables and wires segment. The same story is unfolding again. Remember when a few weeks back we were discussing how Ultratech Cement's foray impacted all of these stocks, and they came under pressure, a knee-jerk reaction of a deep-pocketed player coming into, and that could lead to some disruption. Slight recovery after those first knee-jerk reactions, and then you have the same story unfolding again. Adani Group has now talked about a foray in this space as well. How should one really look at these players? Polycab, Havells, KEI Industries, RR Kabel. Nobody's discounting the kind of market share they hold, the expertise they hold. There will also be a little bit of lag when the larger players really finally come, find their footing, find their exclusivity there or a USP. But what in the interim should be one strategy on these kind of stocks?
See, building construction related industry, or even if you look at the performance of Astral, it is pathetic. I mean, the stock is tanking down like anything. So I think as far as wires and cables are concerned, Sakshi, one thing which we have learned over the past many years is that in such sector, you should always stick with the leaders. Okay, so if you're trying to find out that there is a big theme going on in other stocks within the sector, no. I think leader is going to outperform going forward. So we stick to Havells and Polycab as of now. and technically those stocks are also looking promising. So I think sticking with the leaders makes sense. Not venturing out within the same theme in some small cap category will help us to generate alpha. No, that is not an idea, because it is the winner who know how to manage the margins, and they have a very good grip on the business. So over a period of time, they will be able to deliver. So yes, we are looking at Havens and Polycap within the same space.
Okay, got that. Let's look at some of the other pockets as well. Of late we are also seeing some pickup in the tourism and the hospitality space as well, Mitesh. Summer theme coming back, people planning for their vacations as well. Are you again betting big on stocks like Indian Hotels or a Lemon Tree? Indigo has been doing so well over the last few days again. What's your sense here? Top bets, should one go aggressive here?
Absolutely, Sakshi. Yesterday, I'm back from Hyderabad. So
Okay.
if you look at the airport, if you look at the hotels, I mean, things are going crazy over there. So yes, both Indigo and Indian Hotel, the combination which you have suggested is exceptionally well. So I think within this space, these are the two stocks which one should look at. And I think now, since the business trips are increasing significantly as compared to the normal vacations, actually. So even if you are to the hotel guys and ask for the uh, occupancy. I mean, the hotel where I stayed in Hyderabad, it's full of they have some corporate events lined up. So for at least three
Yeah.
to four, they have a lined up. I mean, the big fat weddings are also going on. So I mean, what you are getting a good mix from both the event side and the corporate side. So I think that is what is helping the hotels to maintain the margin. So technically, yes, Indian Bank and Interglobe Aviation is a preferred pick right now.
Okay, so those are the key picks that one can definitely be looking at in this space. Forgot to ask you about one stock when we were talking about the new age tech space, Ola Electric, and we can now discuss that with the overall auto theme then. Ola Electric, there have been troubles that have been continuously mounting. There is some bounce here today, 5% higher, 54.4. Will you take this bounce with a pinch of salt? And what would you tell all the investors who have been stuck at higher levels, IPO levels, when the stock went up to 100 odd levels as well? And, people were buying on the upside. Now they have been feeling stuck for a long haul. One after the other, there have been troubles, safety concerns, vendors taking the company to court for insolvency matters as well. There has been a lot of raids at the company's showrooms, confiscation of some stuff as well overnight that we've heard. So the troubles keep on mounting. What should one's strategy be?
So, Sakshi, those who are stuck up at 100 plus levels, first advice, don't average the stock out at this point of time. Putting your money somewhere else will help you to generate good alpha. Second thing, as far as technically the structure is concerned, yes, it's a very good bet at the current level, but only from the short-term viewpoint. So with a deeper stop loss of 48, I will definitely buy the stock for the bounce only. So far, so good. I don't think so that in the next 3 months the stock will move above the level of 65 or 70. So I think for a short bounce, I will play the stock. The answer is yes, but ensure that you will play the bounce and get out of it. So don't hold this stock into your portfolio. Point number one, and point number two, if you stuck up at the high level, just let the investment be. Whenever your price comes in the next 1 or 2 years, you exit it out, but do not average these kind of stock at the current level. I don't think so. Any significant upside above 65, 70 in the stock.
Sorry, I was on mute. I wanted to say those that are looking for an opportunity to exit, what is the level that you would suggest them to look at?
I think the level I think again, Sakshi, you work in this kind of stocks. If you stock up at a high level, the best way is to exit partially and use a trailing stop loss, which we keep on discussing on our show, which is a very boring strategy, as your stop loss and take it forward. I think the downside is limited from here on, but in the tranches you can exit on the upside. So at 54, you dilute 10 or 15% of your stake. Then at 60, at 65, the upside, what I don't think so will come in the near future is above 70. So from here 70, you can reduce your position by at least 50 to 60%.
Okay, fair point. And autos largely, Mitesh, what would you do there?
Sorry?
Auto space as
Okay.
a whole.
In auto, I think the view is very simple. Two stocks which are available at an exceptionally great cheap prices. First is Bajaj Auto, and second is Tata Motor. So there is no logic and magic in this. You simply just go and buy it and hold it for the next 1.5 year. The stocks are not going to be available at this price from here on. So I think these are the two choices. As a disclaimer, our clients are holding alongside in both the stocks. So we have already recommended to our clients. They have a direct or indirect position into that. I don't have any position, but there is no logic, Sakshi, to identify any space from this space. The only thing is that you stick with the leaders. You just buy it out and hold it for the next 1.5 years.
Okay, got that. All right, first half an hour is now out. Tell us your call on the markets now. It'll be a better way to really assess how things move from here on the index level, and your top stock ideas, Mitesh, now before we let you go.
Yeah, so I think let's watch out for today's close. It's a weekly close. Any close about 23,250 is will give us a lot of motivation and encouragement to advocate the fact that we are heading for 24,500, 25,000 in the near future. Nifty Bank above 50,000 close. As far as both the levels are concerned, it's a spot close actually. That is also looking promising to us. So I think 52,000 is on the card as far as Nifty Bank is concerned. So we are looking for 23,250 close and 50,000 close above these levels as far as spot is concerned. If that is the case, then picture is looking really promising in the next week.
Okay, got that. Well, then Mitesh, we will let you go. Thank you so much for being with us on the show and helping us with all those strategies across the board. It's always a pleasure to speak to you and get all those insights, the clarity with which you really share with our viewers. The identify the strategy at this volatile time or a difficult time right now, ensure that they don't make mistakes in this current time. So always appreciate for all those views that you share with our viewers. Thank you so much. Always a pleasure to host you.
Thank you, Sakshi. Thanks.
All right, viewers, we'll leave you at that. The first half an hour candle is out, and the good part is that we've improved for the better. And we are now at the high point, 0.3% higher, 23,269 on the Nifty. The Sensex is also back into the green. There is slowly and gradually things improving across the board. When we look at the key sectors also, you'll be able to see that the Nifty Next 50, mid, small caps, they are also back in action. 4% gains can be seen across the board there. You have many indices that are doing well. Pharma, for instance, realty, for instance, oil and gas. You're also seeing some improvement on the auto space, FMCG back as well, barring IT and metals, and slight declines in consumer durables. Rest all of the sectors are still up and about. On the Nifty, when you look at the key stocks, you have Bajaj Finance, that's of course at record levels, 3% higher. Hero Moto, Sun Pharma, Bajaj Auto, Nestle as among those top movers on the stocks. On the downside, again, IT names, no surprises there. Infosys is down. You also have banking counters like HDFC Bank, HDFC Life as a group stock also declining. IndusInd Bank, Titan as among those which are under pressure. But what we'll do is we'll continue to track the market momentum for you throughout the course of the day. So you stay tuned with us. And at 12 noon, I'll be back to answer all your questions on specific stocks with 2 more market experts. Stay tuned with us on Business Today Television. Good to be having you with you.
Business Today Mind Rush, presented by PwC, is back, bigger and bolder than ever.
Received this honor with great responsibility.
For 13 years, this premier event has brought together the brightest minds in business. This year, visionary leaders tackle VUCanomics,